We talk a ton about fighting climate change, but what about preparing for the impacts that are already here? Today, we're going to unpack the financial strategies being built to weather the storm, and I mean that literally. We're talking adaptation funds, catastrophe bonds, corporate stress testing, the whole shebang. So, how do we actually finance a more resilient world? Let's get into it.
12 billion euros. Just let that sink in for a second. That was the staggering cost of just one single event, the 2021 Ahr Valley flood in Germany. And look, this isn't some far-off future projection, it's the actual price tag of a disaster that already happened. It puts a very, very real number on what climate impact actually costs. And that really brings us to the central question of this whole explainer, doesn't it? When a flood, a fire, or a massive drought hits, who actually foots the bill? Is it you and me? Is it insurance companies? Or do governments step in? The answer is, well, it's complicated, and getting it right is one of the biggest economic challenges we face right now.
Okay, so here's our game plan. First, we're going to look at the growing bill that climate change is racking up. Then, we'll define what a real financial safety net looks like. After that, we'll dive into how governments are playing defense and how corporations are starting to go on offense. And finally, we'll look ahead to what a truly resilient future could be.
Right. First up, let's talk about the bill. For decades, honestly, climate change was talked about as this abstract, faraway threat. But the data is crystal clear. It's not abstract anymore. It's an immediate and incredibly expensive present-day reality. Let's put a global number on it, just to see the scale we're dealing with. According to the IPCC, the world was losing an average of $300 billion every single year to climate disasters just in the last decade. And the scary part, that number is only going up. It's on track to become a multi-trillion-dollar problem by the middle of the century if we don't get our act together. So, faced with these massive mounting costs, what do? Well, this brings us to the core concept of this explainer, the idea of building a financial safety net. It's all about creating systems that can take a punch from these shocks without completely collapsing. And this is the key term we're going to be using, financial resilience. So what does that actually mean? It's not just about bouncing back after something bad happens. It's about having the financial strength to see the hit coming, to take that hit, and then to get back on your feet, all without throwing your long-term plans completely off track. It's a proactive game, not a reactive one. Okay, this slide is super important because it clears up something people often mix up. On one side of the coin, you have mitigation. That's all about prevention, cutting emissions, tackling the root cause, crucial stuff. But our focus today is on the other side, adaptation. This is all about preparation. It's about accepting that some impacts are already baked in and unavoidable, and then building the financial muscle to handle them. So who's building the safety net? Well, let's start with the big players, governments. They're on the front lines, and right now they're playing defense, building up financial buffers to protect their citizens, their infrastructure, and their economies. And they've got a pretty powerful toolkit they're using. First, they're creating dedicated adaptation funds, basically pots of money earmarked for specific projects. Second, they're using some really innovative financial tools like catastrophe bonds to shift risk away from the public. And third, they're issuing green and resilience bonds to pull in new money from investors. And this isn't just theory. It's happening right now. Take Germany, for instance. They're putting €500 million a year directly into things like flood defenses. And check out Denmark. They're actually requiring their cities to bake resilient spending right into their budgets. They're making it a non-negotiable part of local planning. Now, this next tool is, well, it's pretty clever. They're called catastrophe bonds, or cat bonds. So here's how they work. A government is worried about a specific risk, say a hurricane. They issue a bond to investors. Now, if that specific disaster doesn't happen, the investors get their money back plus interest. But if it does happen, the investors' money goes straight to the government as a rapid payout. It's a fascinating way to transfer risk. The Philippines did exactly this to secure $225 million in quick funding for typhoons. And if you want to see the sheer scale of public money at play, you don't have to look any further than the EU. As you can see here, a massive 37% slice of its multi-billion euro recovery fund is legally mandated for climate objectives. That's not a suggestion, it's a requirement. And that's a huge deal because it's channeling enormous amounts of capital directly into projects that include climate adaptation. It's happening at the city level too, which is really cool. The city of Berlin raised €500 million by issuing a green bond. And that money is going straight into what they call sponge city projects. Things like green roofs and pavement that can actually absorb heavy rainfall instead of letting the city flood. It's a perfect example of a city tapping into that growing $1 trillion climate bond market. But hey, it's not just governments. The private sector is making a big shift, moving from a defensive crouch to an offensive strategy. Smart companies are starting to realize that adapting to climate change isn't just about managing risk anymore. It's actually about finding a real competitive advantage. So, how does a corporation even begin to play offense? It all starts by asking some really tough what-if questions. The leading guidance out there tells businesses to stress test everything. Just like it says here, what happens to your supply chain, your assets, your whole portfolio, in a world that's 1.5, 2, or even 4 degrees warmer? Finding those weak spots is the first step to turning a threat into an opportunity. A test might look a little something like this. You can see pretty clearly how the risk to things like supply chains and physical buildings just skyrockets with the temperature. And this isn't just a theoretical exercise. BMW actually did this, realized its main plant in Munich was at serious risk, and invested 100 million euros in infrastructure upgrades to protect it. That is turning data into decisive action. And what's really amazing is that this kind of deep risk analysis is sparking some incredible innovation. I mean, you've got insurers like Swiss Re creating brand new products to insure Australia's coral reefs. You have farming businesses creating whole new revenue streams from drought-resistant crops. And you've got venture capitalists pouring money into the next wave of adaptation tech, everything from AI for farming to next-level weather modeling. All right, let's wrap this up by looking ahead, because building a truly resilient future, well, it's not going to be easy. There are some huge challenges to overcome, but there are also some pretty incredible opportunities just over the horizon. And this, well, this is the elephant in the room. This is the single biggest challenge laid bare. According to the UN, right now we're investing about $30 billion a year in adaptation. The problem? The need is over $160 billion. And honestly, that's a conservative estimate. This massive gap just shows you how far we still have to go. So with a gap that big, how on earth do we close it? Well, technology and some clever new financial models might just hold the key. Right now, we're seeing more blended finance, which mixes public grant money with private investment. In the very near future, AI-powered early warning systems could slash disaster losses by as much as 30%. And looking out to 2030 and beyond, we'll see more cities using these mind-blowing digital twins, basically virtual copies of themselves, like Singapore's already building, to model and plan for climate impacts before they even happen. So we'll end on this final thought. Is spending all this time and money on resilience just a cost we have to swallow to survive? Or, by building smarter, more durable infrastructure and stronger economies, are we actually laying the foundation for a more stable and prosperous future? I think the answer to that question is going to define the world we build next.